Let's do it. Mhm. Live on YouTube, live on LinkedIn. Should I go live on more places? I don't know. Hey, 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 hey. If you can hear me, folks, let's begin. It's 8:11. I could have been early today. It's not that I should have been early. I could have been early. God damn it. Come on in, people. Come on in. Take your front seats. You're looking very pretty. Get your beverage in hand. And let's have the show of all shows. The show that we deserve. The show that we deserve. Can you hear me? Should we just begin without asking if you can hear me? Should I begin without asking if you can hear me, folks? Do let me know if you can hear me. Good morning, Nishant, says Mr. Abhishek Sharma. Audible. Thank you so much. So let's have it. Let's begin. The show that we deserve. The show that makes everything worth it. The show of all shows. The show that gets up in the morning. Gets us up in the morning. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We are working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go. But before we go, gotta follow this tradition, right? This beautiful sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does, without fail, every day. And all you need for the simultaneous sip is a cup or mug or glass or tank, a chalice or stein, a canteen jug or flask or a vessel of any kind. Pour it with your favorite liquid. I like some hot water with black pepper in it. And here we go. Beautiful. Let's do it again. Healing. Healing. You know what the simultaneous sip says, right? You know what it says? It says that you are not alone. It says that we are in this together. And that's such a beautiful thing to say. With that out of the way, let's begin. So, a lot of things have happened. But beginning with some prediction that we made that turned out to be true. Didn't I tell you that the Hamas situation, the Gaza-Hamas peace deal, or the television announcement of it wasn't going to be as smooth as everybody is touting it to be? Right? Didn't I tell you? I feel like an African lady in hindsight, right? Didn't I tell you? What did I tell you? What happened? Exactly what I told you. And when did I tell you it will happen? A long time ago. And so on. It's not cool right now. The situation, these people did some public executions. Some bodies they didn't return. No females return. It's just very ugly whatever's happening. Now, this is what we said was going to happen. We told you that it's not going to happen as these guys are positioning it to be. Now, how could we make this prediction? Right? It was very simple. Like Trump is a reality TV guy, right? Apprentice, he's a reality TV guy. And this seemed a lot like television ending, right? A show, everybody's coming back home, some background music in play, some good speeches, and so on and so forth. Speech in the Israeli parliament, and it's all reality TV. But this situation, it wasn't reality TV. This is like Hamas situation. These people are savages, right? So they won't abide by something like this. And that's exactly what happened, right? Now things are getting ugly, and Trump is talking about we'll kill them all if they don't abide by the peace deal. So that's clearly not working out as these people sold it, right? Which brings me to a quote from a very, very good movie. Departed. Have you watched The Departed? Martin Scorsese, sir, direction. Jack Nicholson, Leonardo DiCaprio, Matt Damon, great, great cast, right? Mark Wahlberg, everybody. So it had was like, this ain't reality TV. you know, that's what Jack Nicholson said, and that's exactly what I was thinking when this was all happening. That this ain't reality TV, right? And it didn't turn out to be. So that's geopolitics. It's not reality TV, folks. Speaking of what's not reality TV, Trump is meeting Putin, Mr. Putin, for at Budapest. So that's what's going on. He's trying to. There's a lot of talk about whether US should give Ukraine the Tomahawk missiles for deep impact in Russia. If they do, it might just give them some opening into the discussion. Russia might be forced to relent, but in our opinion, it's just gonna get worse if this happens, right? But still, they are meeting. Let's see what happens. Speaking of Trump and China, it's not getting pretty at all. Uh, Trump came up with a very, very long Truth Social post where he said he's gonna hurt China for every piece of leverage they have. We have to, and China's rare earth blockade has surprised everyone, and so on and so forth. He came out with these statements, right? And then China, instead of backing down, or instead of sort of taking a foot, back, it just came out lashing at US, and it says these threats won't work against China. This is not the right way to go, and so on and so forth. And then he was like, he had to backtrack a little. He had said that, oh, I don't worry about the China situation. It's all gonna be well. China doesn't want a depression, neither do we, and so on and so forth. US doesn't have any chips, right? And as it deals with China, China seems to be upping the ante. So it's come out with, if US puts sanctions over Russian oil, we will respond adequately. That's what Chinese people are saying. So they are saying that whatever we do, it's very legal. Whatever we are doing with Russian oil, it's all legal. If US poses unilateral sanctions against us, they should be prepared for ramifications. So it's pretty solid. In the meanwhile, Scott Bessent, the Treasury Secretary, has talked about China's negotiator came out unhinged, and he was very disrespectful. So now these people are talking on a personal note that this negotiator came to US and he was unhinged, and he talked very disrespectfully, and this wasn't a way to go, and so on and so forth. So it's all getting very ugly with US and China says that we're gonna buy what we're gonna buy, and you're gonna do what we're gonna do. So it's speaking of the China situation, a very interesting thing has happened with the automotive sector. So you know what has happened with the automotive sector? There's something called a Nexperia situation. So Nexperia was a Chinese owned company in Netherlands. It's a Dutch company but Chinese play. So what Netherlands did was, it essentially nationalized Nexperia. Okay, it nationalized. Now, so Nexperia makes some chips for automotive sector. $2 billion revenue, not a lot of action as far as that play was concerned. I mean, it's not a high revenue company, and it doesn't make cutting edge chips, but it makes a lot of chips which are supplied to the automotive sector. So automotive sector is deeply dependent on Nexperia chips, right? So Dutch, the Netherlands basically nationalized the company. When they nationalized the company, China got upset. They said that this is not happening. Dutch, the Netherlands said we are nationalizing because of a security risk, or they had a European law which they brought to the fore while nationalizing the company. As they nationalized, China, what it did was, Nexperia's Chinese unit, it stopped supplying to the world. It blocked its supplies to the automotive world. Now, when that happened, all the automotive companies of Europe and even America, they got hung and dry. They basically hung. So now that these companies, these Volkswagens of the world, these big companies, they will take time to address this situation, to basically replace Nexperia. But as that happens, the entire automotive world could come to a halt as far as the production line is considered, because China's flexing of a muscle. So what do you think about that? Right? That is the kind of leverage China has on the world. What does the world have? What does Europe have? What does America have? They don't have shit, Lebowski. Right? They are basically, they outsourced the offshoring revolution that began in the 80s, and you know came to a head in the 90s when China came into the WTO in 1990 thanks to Bill Clinton. They just sold themselves out of China, and now they can't do anything. They can't move a muscle. So China has said that none of the rare earth metal minerals will be exported if uh, even a pinch of them goes outside consumer use. So they're scared. They're talking that we don't want our rare earth minerals to be going to defense sector directly or indirectly, right? And if it's going to happen that way, we're going to stop the supply. So that's their perspective, and everybody just has to abide by it, right? So that's what's going on with the Chinese situation. The automotive supply lines might just come to a halt, and nobody can do anything about it, right? So that's something that's going on in China. Speaking of India's response to this situation, India is responding in its own way. The rare earth mineral play that the country came out with, the 7,300 crore project, it's basically looking at replacing, or at least diversifying, or at least some sort of atmanirbharta as far as the whole rare earth mineral play. So a lot of geopolitical things taking up. Gold is still high. It just fell a little, not really. It's still very, very high. Silver is high, gold is high. Stocks are up 1%. D Street came up, our Indian stock market. Even the US markets were up. Uh, Indian markets were up because the consumer sentiments sort of picked up, as we talked about. So we discussed this in particular, right? We told you that this quarter is going to be a bit better. Exactly what has happened. Nestle came out with its earnings. Before I come to that, viewers of Thinkers Frequency, I'm sorry for, at the risk of repeating myself, I'll have to tell you that we got to do something. Please share it on your WhatsApp status, bring people in, help this grow, do whatever you can to make this grow. This needs to grow in order to be sustainable. Right now we have 6 people on YouTube and 4 people on LinkedIn. Not cool. Not cool at all, folks. Not cool. Share it on your WhatsApp. Do whatever you can. At least a WhatsApp status share could sort of spearhead this thing. I really appreciate some people having supported the endeavor. Mr. Ashutosh Bhandekar wrote a very sweet piece supporting Thinkers Frequency. He wrote a post on Thinkers Frequency that was very nice. Then there was Mr. Abhishek Sharma also shared on LinkedIn the latest episode. He shared it with a small note, very sweet. Mr. Chirag Patil wrote something on Substack. He shared one of the posts and did it. Very nice of you all. Please keep trying. Mr. Sumant Kumar says, sure, we'll make it happen. All right. So moving on, what were we talking about before this, folks? Yeah, the earnings. So the earnings have come out, right? Nestle has shown a rise in revenue. Profits have fallen, but rise in revenue. Profit because of income, some input costs and stuff like that. But revenue across five segments pretty up, 10% up. So Nestle went up, right? IT companies came out with their earnings. Infosys had an okay earning, right? 5% revenue rise, but adjusting for dollar, it was just 1-2% or something. Profits rose. The small company like Infi, by the way, Infosys beat estimates. They did better than expected. Mindtree, LTI Mindtree jumped 10%, mega deals, right? So that was nice. What did I tell you about the mid-market companies will pick up while the big companies sort of face problems? Exactly what's happening. Wipro fails to meet expectations, profit revenue up a tad. So while Wipro failed to meet expectations, LTI picked up. So viewers of Thinkers Frequency, you must remember when I talked about IT, I told you that as the industry at a macro level falls, right, or deals with all sorts of dangers, the mid market players and the small players will not feel the brunt instantly. They will grow for a while. Why? I gave you the example which I learned from Mr. Subrata Bakshi, that when a big market falls, right, when a mandi is going through a tough time, right, the small patri guy, he doesn't feel the pinch, hardly makes any difference to his life. The small sellers, not really. The bigger sellers, they feel the heat a bit, but the heat is most felt with the end of the mandi, the biggest players who are moving trucks, right? Because they feel the heat in the worst way possible. So that's exactly what's happening. While LTI Mindtree is jumping up and smaller mid market companies are going well, right? Uh, Wipro kinds likes of Wipro are failing to meet expectations. So that's what's cooking in. Uh, but other than that, the earnings are not bad at all, and the earnings will be much better in this quarter, the October, November, December quarter. So the January earnings that are going to come out, that's going to be peak happiness for Indian markets, right? Unless something bad happens in the macro before that. So that's the prediction. It's playing out exactly what we told you. 144 episodes. So people who've been following, for a long time, you will appreciate how we saw the markets churning in, right? We saw that this quarter will be bad, the next quarter will be bad, but the next to next quarter will be slightly better, and then this particular quarter is gonna really kick it, right? And that's exactly how it's panning out. All you need to look into the future. If you're looking into the future, you've got to look at first order and then second order effects. That's how you're gonna be able to predict whatever is happening, and we've been very good at that. So touch wood, right? That's what's going on. S&P president has given an interview. He says, global shocks, no worry, India stays investors, darling. Now, I really like this person. I really love him, right? Why do I love him? Because S&P gave a sovereign bond upgrade to India, right? Triple B negative to triple B, which really helped Indian bonds market. Companies would be easily able to raise external commercial borrowings and bonds because of this person and this organization. I don't care much about the organization, but this Frenchman I like, right? So he has really helped India in a lot of ways. After S&P's, Moody and Fitch didn't upgrade, right? But Japanese BRI, was it BRI? The ratings and intelligence something unit, they gave an upgrade. So that's what's happening, and it happened after 18 years, so it's not like a small thing. So India really benefited. He says India stays investors darling, which is very nice, very nice. So that's what's happening, sort of a macro level, right? Stocks came up, everybody's scared about what's going to happen to the economy. Geopolitics is very scary. China is screwing everybody else. Mr. Abhishek Sharma writes a very comment. For Indian economy, it makes sense for banks, automotive companies, FMCG due to festivals and GST cut. Apart from it, do you think other reasons for any other industries? So that's a good question, Mr. Sharma, and that's a slightly deeper question to answer. So you say Indian economy, it makes sense for banks, automotive, Japan Credit Rating Agency, JCR. No, it wasn't JCR. It wasn't JCR. It was TRI or BRI, something. It's the biggest credit rating agency of Japan. Mr. Manjunath Madhabal writes it was Japan's credit rating agency. No, Japan's biggest credit ratings company. It's RNI. 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 It was RNI. Mr. Manjunath Madhabal. It was RNI, not JCR. I forgot. When you're talking, these details are hard to nail, right? That's what I felt, but it shouldn't happen. It would be more impressive if I have all these things just like at the tip of my tongue. But anyway, coming to Mr. Abhishek Sharma's question, he says it makes sense for banks, automotive companies, FMCG due to festivals and GST cuts. Apart from it, do you think other reasons or any other industries? Okay. So if it makes sense for banks, Mr. Sharma, you'll have to look at the second order effects. If banks are going, they are giving credits, loans to housing. So housing should pick up, right? If housing picks up, steel picks up, cement picks up. Then there's government capex, which happens if government capex is strong. Right now, government capex is gonna taper because they've spent a lot of it, right? But if government capex is intact, construction infrastructure picks up. If infrastructure picks up, EPC picks up, right? Engineering, procurement, and construction companies, the road, the railways. If railways is picking up, it's cool. Then there's defense, right? HAL just showcased that they're gonna make after 1,000 planes with Russian assistance. They're gonna make the LCA Tejas, right? Indigenous. So defense picks up, heavy engineering picks up. Then there's shipbuilding that can pick up. What won't pick up is a very good question, right? What won't pick up? What will be bad? Not everything can be good. What will be bad? We'll have to at least say one thing which is bad, right? In order to have a balanced view. Otherwise, we're just saying. So what can be bad? What can be bad? Of course, IT is bad, right? IT is bad because of whatever is going on. If IT is bad, there are gonna be a lot of second order effects of that, right? Housing, you'll have to look at housing. You'll have to look at discretionary spend on the elite part of the situation, like restaurants and so on. Restaurants could be bad, right? Because if GLP drugs pick up, right now 1 lakh people are taking GLP drugs. If 10 lakh people start taking GLP drugs, or 20 lakh people start taking GLP drugs, discretionary spend on restaurants and fast food will come down, right? If it comes down, that's gonna be bad. So you'll have to take a macro view, but the devil lies in the details. So everything has to be looked at very, very carefully and very analytically, right? And the beauty of this analysis, the best analysis, is when you can link things from one to another, right? Second order effects, third order effects, linkages, everything connects with everything else. And that's if gold rises, let's say if gold keeps rising, it's gonna be bad news for the jewelers, right? But it's gonna be good news for the gold loan guys, right? So something like that. Moving on. By the way, Trump had said, that he talked to Mr. Modi, and India is going to stop Russian oil. Indians came out and said, no, we didn't have any such talk, and we're not going to do that. So that's a very big embarrassment for Trump. Basically, the whole strategy of having having India and China buy Russian oil to stop the war, that's a bunch of bullshit, right? You've got to pivot. Now, it made sense that Russia is making a lot of money, and that's why it's waging a war. If you stop the money supply, it'll stop the war. And the way to stop the money supply will be to go to the sources: India, China, Turkey, EU. That was a good idea on paper, but it's clearly not working out, and it won't work out. Now, both India and China have embarrassed US by saying that if you come to us for the Russian oil buy, it's going to be a problem for you. and India is obviously much kinder, right? If that's a word, much more kinder. Is kinder a word? Anyway, kindest. No, I don't think kinder is a word, but much more kind, right? So India says that we didn't talk. For us, national security, the national consumer is of paramount importance. So that's what's happening, with the whole thing. F&B and Inc. cooking up an IPO storm. Food hospitality companies look to raise 9,000 crore as investor appetite increases. So Cure Foods, Milky Mist, Dairy Food, Prestige Hospitality, Foodlink, and all of these people are trying to go IPO. Well, I wrote a lot about Cure Foods IPO. I wrote a big piece about Cure Foods IPO. I think it was overpriced, very, very overpriced. I think the company has no legs to stand, without, let's say, Zomato and Swiggy. It's heavily dependent on distribution on these third party channels. Its own user acquisition is not that great. Its profitability profile is not that great. Its growth is also not that great. So it's just been very good at raising money and has been able to sustain itself, right? But thanks to Mr. Nagori, the founder of Cure Foods, relationships with Flipkart, right? Mr. Binny Bansal is a major investor. But other than that, even if you look at F&B IPOs, if you look at Barbecue Nation, a great company, a very, very good company, extraordinary company, right? What does its stock look like? So let's look at Barbecue Nation share price, right? It's year to date it's 65% down since the last year. 65% down last year. So if you invested in its listing or whatever, if you invested in the stock, you basically lost more than half of your money. 1 lakh will now be 45 lakhs. That's how Barbecue Nation did. So I'm not very positive about IPOs of these companies, right? Not at all. Rebel Foods, no. Cure Foods, no. And so on and so forth. But, they got to go IPO. They need to return some money to the investors. Let's see what happens. Moving on. Speaking of IPO, Zepto was looking at going IPO, but it's not. It has raised $450 million out of $7 billion. Mr. Manjunath Madhabal has a comment. I think these startups which are not profitable companies are bad for our stock exchange in the long term. Instead, proper profit making companies should come for IPO, says Mr. Manjunath Madhabal. So a lot of profitable companies are also going IPO. It's not just these startups. These startups are, they get a lot of press, fortunately or unfortunately, because, there's a lot of VC action. VC is a very glamorous play, right? So they get a lot of press, but a lot of SMEs go IPO, and many of them have a stable profitability profile. The small cap, mid cap segment, if you look at it, it's not a loss making play. VC companies are loss making, and they have to go to IPO because they need to return money to the investors. Other than that, most companies which are going IPO, not the VC ones, they have a pretty stable kind of a business. So if you look at the other companies which are going public, you won't find that kind of faff, right? But anyway, Zepto has raised $450 million, some 4,000 crores, over 4,000 crores, right? $7 billion value. They say that they have about 900 million in the bank, cash in the bank, $1 billion, approximately 8,000 crores. Well, they are very well funded. These people have really good connections with investors. It's just extraordinary how they've been able to raise money, right? Any other company would have had to fold by now, but they've been extraordinary. People say the founders are, the parents are big bankers and stuff. Clearly shows. It's just extraordinary how this company has been just losing money and growing and having all sorts of negative brand equity perception, dark patterns. This is a company which has pioneered dark patterns, right? It's just all sorts of bad practices, but still being able to raise a lot of money. I'm very happy for them, but bad for everything, because quick commerce, every money that goes to quick commerce is a money stolen from small and medium businesses. I'll say that again. Each penny that goes to quick commerce is a penny stolen from small and medium businesses. So if you go to the market, right? And an open market, and you buy from a small business, that's way more helpful to the economy, to the small business, to everything, than using these quick commerce players. Mr. Abhishek Sharma writes a comment. Although a lot of focus on healthy foods is going on, apart from Amul, none of the major companies have come out with healthy products range. Well, Amul is coming out with a lot of products. A lot of people are coming out with a lot of products. Mr. Sharma, I'd like to disagree there, because if you look at the bread segment, right, there are a lot of healthy breads which have started coming on. Uh, Packaged foods is going towards health, right? Packaged foods is trying to shift its perception, because not because they are conscientious, or they're basically, some goodness has prevailed. No, it just makes sense to premiumize their offerings and differentiate their offerings, because the bottom of the barrel has no pricing power. So health has some pricing power, so they believe, and so you are looking at a lot of snacks and a lot of protein play, and so on and so forth, right? So that's what's going on. Moving on, folks. Are you having fun with your beverage? I hope you're having fun with your beverage, right? Very important. Very important to have fun with the beverage. Like Nestle are not pivoting. Oh yeah. So Mr. Sharma says Nestle and Unilever and these people are very slow. So even they are trying Atta Maggie and stuff like that, right? Maggie is Nestle. So even they are trying, but these companies are very, very slow, right? These people are giants. So it takes time for them to respond to. They're going to be the last people to do good things, unfortunately. Mr. Tushar Tiwari has a comment. After the discount period of quick commerce, the local stores are more cost effective. Even the retailer like Reliance, Smart Mart, D-Mart. Well, that's good. Good news. By the way, speaking of quick commerce, Eternal's earnings came out. Eternal's earnings, they made a loss yet again. Most of the earnings that they made, the profits, most of them were basically other income and financial income, right? Their business lost money. NOS is narrowed a bit with Blinkit. They've changed. The revenue tripled. So the headline says revenue tripled and people are flipping out. But the revenue has tripled only because Blinkit has gone inventory led, right? So when you go inventory led, everything you sell becomes your revenue. But if you're a marketplace, the commission you charge the seller is your revenue. So there's a difference between gross merchandise value and revenue if you're a marketplace, right? When you're a marketplace, gross merchandise value is the product value which you sold. It's not the revenue. The revenue is the commission you charge to the seller, right? But when you become an inventory-led play, the revenue becomes equal to the GMV, so to speak, if I'm not wrong. Yeah. So that's what happens, right? If you're selling inventory, everything you sell essentially becomes the revenue, the product sales. Moving on, I hope I'm not screwing that up, by the way. Inventory led model makes GMV equal to revenue. Let me just confirm that. It's basic. I just don't want to be factually wrong, so somebody comes up, you know, because a slip of tongue, even if the sentiment is right, uh, yeah, full sale is revenue. Yeah, perfect. Inventory led. So I'm 100% right. 100% right. Okay, exactly factually correct. I was just confirming. I just didn't mean to screw it up. Mr. Sumant Kumar says, don't we calculate total food order value in revenue? Well, if you are, so here's a difference. If you are selling that food, if you're making that food, food value is revenue. But if you're a marketplace which is selling somebody else's food, right, that food value is not your revenue. Your revenue is the commission that you will charge the restaurant. You understand? That's the difference. But if you're an inventory led player and if you're selling something, that thing becomes your, revenue. So Moving on. HAL's Nashik MiG Sukhoi plan to build LCA Tejas now. That's very good. Mr. Rajnath Singh is personally taking care of that. A lot of action on that front, which is amazing, right? Which is amazing. As I've said, defense is basically, uh, you know, defense is if shipbuilding is the mother of heavy engineering, defense is the father of heavy engineering, right? Defense has so many uh, second order effects. Defense industry, the growth in defense industry, that's just hard to fathom. Unfortunately, I do not see any good news coming from India as far as drone manufacturing is considered. The impetus that we are placing on fighter aircrafts, yes, our fighter aircraft squadron strength is down. It's down as low as it was in 1960s, which is bad. However, I just need to read some good news when it comes to drone manufacturing, because that's where the money is. Speaking of drones, by the way, China has come out with flying cars, right? They say they're going to be mass producing flying cars by 2027. Mass producing flying cars, folks. Mass produced flying cars. What do you think about that? Is America gonna be taking over that, right? If India is India going to be into the flying car business, or at least the manufacturing of it? Very unlikely. Even though there was news that Delhi is going to have a flying taxi and Bangalore is going to have a flying taxi just next to next year, right? Where they will have some hotspots, let's say Gurgaon to CP in 20 minutes, and it's going to cost you $5,000, something like a helicopter play. So let's see how that comes. But we are definitely not manufacturing flying taxis at scale in the next year or so. That's very sad. Mr. Abhishek Sharma writes, there was news of defense corridor in Andhra where there were also drone companies. Yeah, Mr. Sharma, you're right. The defense corridor in Andhra, great move. Mr. Chandrababa Naidu doing really well. However, that's also drones is the problem. Drones cannot be a footnote in that story. They have to be the center stage. You right? That's what I mean. But anyway, we won't discuss politics. It's so dumb. It's so dumb. Right now, some politician, I won't say who, said that we need a government job at every house in Bihar. So government job for every house in Bihar. That's our political discourse, folks. We are just totally, screwed. Cuckoo FM has raised money, $85 million, out of which 50 million is going for primary and secondary deals for 30 million something. 550 million value. Cuckoo FM, I wrote a big article years ago about how Cuckoo FM was a great business model. Right? Why was it a great business model? Because, with that particular app, what you've got to do is you've got to do audiobooks of existing books. Now, people can't read anymore, unfortunately, right? They've lost the ability to read. So they will have to, but they like knowledge, right? They like to listening to stuff. Listening is easy. And there are popular books already. So if they get a place where they can listen to all of these books very easily, that makes instant sense for a user. Now, the beauty is that there's no production cost attached to this, right? There's no production intelligence. There is a cost. Let's say if you're going to a studio and you're booking a studio and doing a book, right? That's a very nice thing. So it's easy, it's predictable. Since the book is popular, you don't have to invest a lot in its marketing. Let's say if you're making an audiobook of the Fountainhead, everybody knows Fountainhead, right? So you won't have to invest in marketing of Fountainhead to make the audiobook sell, right? People will buy audiobooks because you're already riding on an IP, right? All you're doing is converting it into audio. So marketing costs come down and you are able to do that. Production costs, there is no intelligence linked to the production of things, right? It's not that you're thinking about writing a book, right? You're thinking about creating an IP. You're not creating an IP. You're just translating the IP in a different form, right? And then, as people's lives change, they can't read books anymore. but they want to flaunt that they've read books, and right, so they will be able to listen to books and have a vague idea about them, but that becomes a very good model. So that's why I had written something about Cuckoo FM. So it's like Netflix, but without having to be a studio itself, right? They're Netflix without thinking about what to make and how to make something, right? They don't have to creatively think about something. They can just do good audiobooks of existing material, right? And that works wonders because there's so much of stuff that's out there. They just have to translate it, right? So less creative problems like Netflix. So Netflix has to make its own movies. Those movies have to work. They can't be shitty movies. If they're shitty movies, people start hating on Netflix and so on and so forth, right? That's what I wrote. But now what Cuckoo FM has started doing, it started making its own micro drama, right? So it started making its own micro dramas. Now, if it's making its own micro dramas, I take all of it back because that shit is creative. Now, these people who were good translators, they're not good creators. They don't know. They've not watched movies. They don't have any idea about creative industry, right? These people are tech people. They don't have a taste for movies. They don't have a taste of art. They are basically just translators, and their cataloging of it, that's their strength. Their strength is basically social media marketing, digital marketing of an existing catalog, maybe some microtransactions, maybe some subscription. That's their intelligence. So nobody should expect these guys to do even a half-ass job in making any creative IP, right? So if they're entering the business of micro dramas and creating art, right, that's when the whole spiel falls down. It's done. The business, it's no longer gonna be whatever money these people spend on these micro dramas. It's just money in the toilet, right? Mr. Sumant Kumar says, how are they differentiating themselves from Audible from Amazon? Any thoughts? Why it clicked in India? So Audible has English, right? These people go regional, so they can go in regional languages. Tamil, Telugu. India has a lot of regional languages, right? So if you can translate good books and bring them in indie languages, that's beautiful, right? That's just unbelievable. Northeast has so many languages. East has different languages. West, South, North, everything, right? So they can go deeper into the linguistic demographic of the country. That's how they become different from Audible, and they will be different from Audible forever, right? So because Audible will not be able to do that. It's an ops play. So I would have loved to do this kind of a business because I'm a studio guy. I make a lot of music, right? So studio is like my third home. One is home, then is office, then is studio, right? So I would have loved to be in that kind of business, but not everything is in your control. Moving on, I was building something else. So moving on. Try modes graded fines, interest on delayed payments for telco. Try and telco, they're perpetually in the news. Speaking of telco, folks, India remains a priority market, says Xiaomi CEO. So a lot of chit chat about how Xiaomi has lost ground in India. It used to be everywhere, right? Xiaomi was ubiquitous, but it's not anymore. So he says that because of the regulatory crossfire, because of whatever international conflicts between India and China, and we had to slow down, but we are looking at India very seriously. That's what he says. Well, India doesn't miss Xiaomi, hopefully. But India's problem is that it has no company making its own phones, right? So we don't have a brand, even though we are manufacturing phones of other companies, right? We don't have phones of our own. We don't have a brand of our own. That's why I wanted to build Seneca. Seneca could have been a smartphone brand with a difference, right? The whole distraction-free smartphone play. But unfortunately, that couldn't fly. But yeah, still a market for that, by the way. Somebody is going to come up with that phone, and then Indians are going to buy it. And transmission industry must boost capacity. So obviously, power sector is rising a lot in India. There's a lot of green energy. There's a lot of, energy in general. India's 2047 mission has nuclear energy, has solar energy, has a lot of, and with that comes transmission, transformers. That's a very, very important business, and that's where the money is flowing as well. So that makes sense. That's the second order effect, right? My grandfather, no, not great grandfather, my maternal grandfather, he built a great business, like a over 100 crore business, let's say, many. He was one of UP's biggest transformer service companies. So that was extraordinary. So obviously, transformers transmission business is the next step, which it's not a consequence because it runs in parallel with the growth of, let's say, power, right? But it requires separate set of investments. So that's what India is looking at, which is very nice, right? India's retail REITs market likely to touch 80,000 crores. Uh, Retail REIT is Real Estate Investment Trust. The retail part of it is growing, touching 80,000 crores. Right, India can become a 60 to 80,000 crore market, the retail REIT, by 2030. This would be a 30-40% of overall REIT market, which is projected to touch $25 billion. That's some 2 lakh crore by 2030. Uh, when it comes to a developed economy, right? Developed economies, India's REIT universe will be very similar to mature economies where retail REITs form 15 to 25% of total REIT market cap. So that's what's happening. Malls, A-grade malls maturing into stable income generating after three retail REITs are expected to launch over the next 3-5 years. So retail REITs basically are very important for, let's say, financing of real estate growth in the country. So this is good news. M3M, Jacob, and Kotaya for a housing project. A lot of housing projects. We've talked a lot about them, so we won't repeat ourselves. Raise it, spend it, grow it. Mid-sized firms which are keen to scale up, tap up PE and VC firms to raise money, right? Investors also look to infuse 500 crore in companies to help them take on bigger players. So that's what's happening in a lot of cases, of course, right? Over half a dozen mid-sized consumer companies are in talk with private equity firms, venture funds, or family offices to raise fresh money. Well, this shouldn't surprise anybody. Kitchen Overall, the consumption economy, the domestic consumption play is heating up, and it's only going to give good news, in my view, in at least like 8 quarters or so, because it takes time for these things, like let's say personal tax rationalization or GST rationalization, or let's say private capex, right? These things to materialize sometimes take time, and when they are taking time, when they start picking up, they pick up in a lot of big ways. So if you look at this report that these people have come out with, we're seeing clear resurgence in investor interest in Indian consumer space. Founder-led brands that have built real customer loyalty. Raw Pressery, Petal, a kitchenware startup, uh, Haldiram, of course. These people have a lot of examples to quote in that area. By the way, kitchenware is a very, very big, it's a very heavy money making opportunity. Has always been, is still is, and often overlooked because people don't understand how much money these people make. The gas chulha guys and so on and so forth. It's just extraordinary the kind of money they print. Right? Moving on. Eka Mobility secured 500 crores. It's into electric buses. So you remember electric buses, they are getting a lot of fillip from India, because especially in places like Delhi, electric buses become very, very important. There's a lot of pollution, right? And that's getting a lot of money. Moving on. AAI profit source as small towns bring big gains. Airport Authority of India. Profit of 55% in FY25. A lot of money. Revenue share. Delhi's airport makes 45%. 38% of Mumbai. So a lot of money gets just these two airports. Airports make a lot of money. So viewers of Thinkers Frequency would remember I told you that airlines don't make money, right? Airlines don't make money. If you want to be a millionaire, start as a billionaire and then start an airline. That's a very popular phrase. But airports always make money, right? Why do airports make money and airlines don't? Well, that's the nature. Airlines, they are hyper regulated consumer wise. They have a lot of variables at play. There's a lot of shocks in the ecosystem that keep happening, right? They don't have much of pricing power because their prices affect a lot of consumers. So the government steps in and makes sure that the pricing is adequate, right? That cuts a lot of, it's commodity. So it's their, the service of an airline is basically service of an airline. Airports are not commodity because they're very few, right? And they have all the pricing power. So they price themselves as they should, which makes airports very, very good business. Profit of tax, 7,300 crores, revenue of 20,000 crores in FY25, which is awesome. Which is awesome. And it's growing also. Right now, so many airports are going to come, right? Jewar Airport, Navi Mumbai Airport, a lot of airports that the country wants to build, which is going to be great news. Great news. Rupee has closed 87.8882, close in highest a month. This was expected. We talked about it. Viewers of Thinkers Frequency, why the rupee has picked up, right? Because RBI intervened. RBI intervened because RBI had to. RBI had to. Why? Because rupee was falling. 88.8 was very, very low. So RBI had to essentially step in. They sold a lot of dollars, bought some rupees. That's how you fix the currency troubles, right? Moving on. We've talked about our stock markets going up. Although it's time to be very careful, right? Very, very careful. Digital public platforms should be accessible to the entire world, says RBI chief, which we've talked about enough. 27 countries either adopting or considering MOSIP-based systems for essential services, right? I've already told you about the car maker race to secure chips amid rising China risks, Nexperia problem. I've talked about Eternal. I've talked about TSMC, by the way, profit jumps 39%. All the growth in the stock market of the US at least, it's all AI. Even China, a lot of it is AI. TSMC is making money. Moving on. 6 ARCs show interest in DLI Logistics. ARC is an asset reconstruction company. They buy stressed assets and then they sell those stressed assets, recover money. So DLI Logistics is one of the players. They had 923 crore debt. Now that's looking at getting bought by the ARCs. Moving on. Ram Singh, external member of the Central Bank's Monetary Policy Committee, says further rate cut today runs the risk of an overdose. I agree. We should give some time for stabilization of the rate cut so that all the prospects are aligned, right? Otherwise, it's going to hurt the bond markets. We talked about how the rate cuts affect the bond markets, right? We've talked about it. So in order for the boat to not get rocked, all the good news needs to seep in. And then, if you're not growing and if the inflation is still very much benign, let's have the rate cuts. That's exactly his view as well. DBS faces income tax query over 2019 masala bond investments. Masala bond. Do you know about masala bonds, folks? How many of you know about masala bonds? Do you have any clue about masala bonds? So masala bonds are basically rupee dominated bonds. These are external bonds, but rupee dominated. So rupee, is to be returned, rupees lended. So they are basically India's version of Japanese samurai bonds, they're called, right? So they had to name something, so they named it masala bonds because somebody, maybe because of India's heritage of spice trade or whatever. So Tax Department seeks detail on bank's ownership and investment compliance, DBS, masala bond. Is this a meme? says Mr. Tushar Tiwari. Oh no, it's a serious investment product. It's a serious security. So masala bond, I'll give you the textbook definition. Masala bond. So masala bonds are bonds issued outside India but dominated in Indian rupees, right? So debt instruments issued by Indian entities in foreign markets but dominated in Indian rupees than a foreign currency. Unique structure allows Indian companies to raise capital from investors while protecting themselves from currency fluctuation risks, right? The risk associated with exchange rate is transferred to the foreign investors who buy the bonds. So the first masala bond was issued in 2014. So it's not a meme at all, but it's an Indian rupee dominated debt instrument. I hope that clears it. So something wrong is happening with the debt. DPS is facing an IT. Tax on masala bond was zero between September and March FY19. After March 19, tax bond was fixed at 5%. Interest was waned after 2019. So that's what's happening, right? By the way, speaking of bonds and all, IndusInd Bank's story is just getting worse day by day, right? They found 255 crores as just fake entries on the bank sheets. Very, very pathetic. But nobody should be surprised, at least viewers of Thinkers Frequency should not be surprised, because we talked about how this was going to pan out, right? Hindujas, the family itself, which makes me very scared. So I'm not going to touch Ashok Leland's stake ever, right? Why? Because if the family is such, the culture trickles down, and you never know when you're going to listen to a bad news coming out from those people. As Mr. Sanjeev Bichandani sir, leopard doesn't change its spots, right? After record high, we've talked about this. IMF director has said India must push reforms liberalization to attract capital. Now, this is one of the least insightful things that he could have said. India must push reforms to attract capital. Well, thanks for nothing, sir. India in talks with US, EU and Oman for FTA, says Mr. Piyush Goyal. And Mr. Piyush Goyal had a very interesting speech. I'd recommend you to watch that speech yourself, the full bit, right? He gave a speech to the Indian industry, and he said, I'm very disappointed in you guys, right? Why? Because whenever we were talking about FTAs and we talk about allowing foreign companies, all of you start talking about how it's going to hurt you. It's like 2 or 3% of your market might just get affected by or brought in, by foreign companies, and you start cartelizing against it. This is not how we're going to cut deals, right? Because if we are taking so much from these countries, we need to give to these countries. Also, when it comes to buying things, it doesn't take you a second to start buying anything cheaper, let's say from China. I've been talking about indigenous, buying. You should buy from Indian companies, but you are so, profit minded that if even there's a BPS difference in getting something from China or wherever, then you take it. This is not nice, right? So he openly said the problem, because there's a lot of cultural issues as well, right? As we talked about, culture eats strategy for breakfast. So it is a cultural problem with Indian industry, right? They first of all don't want to innovate. They don't want to invest in R&D, right? They don't want to, let's say, lead any technology front. They just want to wait and watch. They don't want to invest in capex, right? Private capex always lackadaisical. Now it's heating up. So there's a lot of cultural issues as well as far as the Indian Inc. But he very beautifully and openly brought it out, which was very necessary, right? You can't expect the government to be cutting FTAs like India, UK, where we get everything we want. But as soon as we talk about getting something from outside, the whole industry is like, no, we can't do this, no, we can't do this. And then they're very happy to be buying things from China, right? So they don't want Indians to buy things from outside, because that hurts their industry, which I agree with, right? But they're very happy to buy from China, even if it's just a delta difference when it comes to costs. So these things are should be pointed out, and they are, which is very nice. Companies nudged to build critical mineral capacity amid global supply chain constraints, right? India has 7.52 metric ton rare earth minerals, imported 2.72 tons of rare earth minerals in FY24. 16,000 crore NCMM scheme launched in Jan 25. So that's what's going on. India UK collab. We've talked about this enough. Mines industry has so far conducted 5 tranches of auction, putting 55 critical and strategic mineral blocks under the hammer. 34 have been successfully awarded. Right? Yeah. So that's what's happening, folks. We've come to the end of the 144th episode of Thinker's Frequency. Our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis right before we punch in. I hope you had fun. I hope it added value to you, right? It was fun for me. It definitely added a lot of value to me. I read a lot, thanks to you. But we've got to grow. So please do whatever you can to make this grow, right? Share it everywhere on WhatsApp, on LinkedIn. I'm really appreciative of for Mr. Sumant Kumar, Mr. Abhishek Sharma, Mr. Ashutosh Bhandekar, for spreading the word, Mr. Chirag Patil on Substack. Please keep at it. We'll have to grow in order to be sustainable. Otherwise, it's going to be difficult. Mr. Abhishek, I need to thank a few people, of course. Mr. Abhishek Sharma, Mr. Sumant Kumar, Mr. Manjunath Madhabal, Mr. Tushar Tiwari, and everybody else who joined, right? Thank you so much. We need a session on Gadchiroli as well, says Mr. Ashutosh Bhandekar. Yes, your hometown, which is getting that JSW thing, right? Plant. That's gonna have something. We're gonna discuss it. Let's park it for some time. All right, folks. It's 9:12. We should punch in anytime soon. Daily mental workout, daily dose of insights and analysis. You don't lead to paralysis right before we punch in. It's 9:12. We're gonna punch in anytime soon. I wish you a beautiful day personally and professionally, and I'll see you tomorrow, same place, same time, hopefully. Please take care. Bye bye.